Look at the numbers on your screen. The S&P 500 has shattered every historical ceiling. The Dow Jones is charting a vertical line that defies gravity. Corporate profits, on paper, are astronomical. Now, look out your window. Look at the boarded up storefronts. Look at the families working 3 jobs just to miss rent. Look at the infrastructure crumbling simply from old age and neglect. Here is a brutal, counterintuitive statistic. In the last 12 months, while stock indices hit all-time highs, actual physical freight volume, the pulse of the real economy, plummeted to its lowest level since 2008, while tech giants doubled in share price. Small business bankruptcy filings hit their highest level since the Great Depression. This isn't just a contradiction, it is a logical dead end. It leads you to an ultimate, subversive question. What if the stock market isn't rising because it is measuring economic health, but because it is measuring the collapse of the currency? What if those green arrows aren't symbols of prosperity, but the final countdown of a dying system? Welcome to the Crack Up. Boom. I am your narrator. Today, we are going to dissect this great illusion. This is not stock picking advice. This is an autopsy report for surviving the greatest wealth transfer in history. As we stand here in late 2025, there is a strange static in the air, a mix of euphoria and terror. This has happened before. History doesn't repeat, but it rhymes with terrifying precision. To understand why markets melt up while the world burns, we have to look at when this script was first written. There is a chilling name for this phenomenon in economics, Katastrophenhaus. The catastrophe boom. First described by Austrian economist Ludwig von Mises. It predicts a phase where the public finally realizes that the government and the central bank have no option but to print endless amounts of money to service unpayable debt. In this stage, rational behavior flips. If you hold cash, you are the fool. If you save, you are the victim. To flee the dying currency, people panic, buy any tangible asset, or anything that represents a tangible asset. That is why the market rises. Not because companies are becoming more valuable, but because the unit of money used to price them is becoming worthless. It is like measuring a house with a ruler that keeps shrinking. The house didn't get bigger, the numbers just got higher. Let's go back to the Weimar Republic, 1922. It is the most famous case of hyperinflation in modern history. But most history books leave out the most critical part. They tell you about the wheelbarrows of cash and the expensive bread, but they don't tell you about the stock market. As the German mark began its death spiral, the Berlin Stock Exchange didn't crash. It exploded. As German society disintegrated, as the middle class was wiped out, as riots became the norm, the stock index soared from thousands to millions to billions. Imagine the average German investor of that time. Let's call him Hans. Hans looks at the newspaper and sees his stock portfolio doubling every day. He feels like a genius. He feels rich. He is drinking champagne to celebrate his gains during what should be his nation's darkest hour. This is the illusion. This is the nominal gain. Because when Hans finally sold his stocks to buy bread, eggs, or a new pair of shoes, he found that the prices of goods had risen faster than his stocks. He was a billionaire on paper, but a beggar in reality. There was one man who understood this, Hugo Stinnes, the inflation king, while others were mesmerized by rising stock prices. Stinnes was borrowing as many worthless marks as he could to buy hard assets, coal mines, steel mills, shipping lines. He understood that the rising stock market was just the bloating of a monetary corpse. Fast forward to Zimbabwe, 2008. The same script. The Harris Stock Exchange was the best performing market in the world. If you only looked at the index, you would think Zimbabwe was an economic powerhouse. The industrial index rose 30,000% in a single month. Did that mean Zimbabwean companies were producing more goods? Number. It meant the Zimbabwe dollar was dying. The rally wasn't profit, it was panic. It was capital screaming for an exit. Now, let's bring it home. 2025. You might say, this is America, this is the West. That is third world stuff. We have the Federal Reserve. We have the world reserve currency. That is arrogance. And arrogance, as history proves, is the precursor to ruin. Let's look at the data. The data they don't want you to dwell on. In the last 24 months, the market cap growth of the so-called Magnificent Seven, or whatever the tech leadership is called today, has exceeded the GDP of every nation on Earth except the US and China. But what is the fuel for this growth? Is it productivity? Is it real innovation? Partially. But mostly, it is liquidity. Since 2020, and accelerating again in 2024, the global money supply has gone vertical. To keep the debt Ponzi scheme running, to pay the interest on the national debt, which now exceeds the defense budget, they have to create currency. They don't call it Q anymore. That's an old term. They hide it behind acronyms: BTFP, Bank Term Funding Program, liquidity swaps, yield curve control. Here is the truth they won't tell you. They are not planning to fix it. They are not planning to pay back the debt. It is mathematically impossible. When you owe $36 trillion and deficits are growing exponentially, you have two choices. 1. Default. Tell the world you are broke. This causes instant, total collapse and loss of power. 2. Inflate. Print the money to pay the bills. Pay the debt with money that is worth less. They will choose option 2. Every single time. So, this is why stocks are hitting new highs. It is a stealth default. It is a legal, quiet theft of your wealth. Every jump in the index is actually the sound of your purchasing power being diluted. But there is a darker twist. In these historical cycles, there is always a group that knows. If you analyze the insider trading data right now, if you look at the personal portfolios of CEOs and large institutional investors, you see a disturbing trend. While they go on CNBC and tell you to buy the dip, while they hype up AI as the new golden age, what are they doing? They are selling at record speed. This isn't speculation. This is SECI lings. Zuckerberg, Bezos, the Walton family, you can list the names. They have cashed out hundreds of billions in 2024 and 2025. Who is buying at these all-time highs? Retail investors, pension funds, the passive index funds that hold your life savings. This is called the distribution phase. It is institutionalized wealth transfer. The smart money is swapping highly overvalued paper assets for the last bit of real purchasing power held by the public. They are literally handing you a grenade with the pin pulled and telling you it is a golden egg. Why do this now? Why 2025? Because we are at the end of the long-term debt cycle. Ray Dalio warned of this. Neil Howe warned of this in The Fourth Turning. The frantic, illogical market behavior we are seeing is the system's terminal lucidity. It's not just about inflation. It is about the breakdown of trust. Financial markets are essentially a confidence game. It is a collective hallucination where we agree these pieces of paper or digital numbers have value. But when a nation weaponizes its financial system, as we did when we froze Russian assets in 2022, you break the hallucination. You told the world, this money isn't yours, it is ours, and we can zero it out if you disobey. In that moment, the Global South, the BRICS nations, every non-Western entity began looking for the exit. They began hoarding gold. This isn't just trading, this is geopolitical tectonic plates shifting. Central banks bought more gold in 2024 and 2025 than at any time in history. Why, if it is a barbarous relic, if it yields no interest, why are they filling their vaults with it? Because they know what comes next. They know that when the music stops, the only assets that matter are the ones with no counterparty risks. Stocks have counterparty risk. Bonds have counterparty risk. Currency itself is a liability of the government. Gold is not. But let's get back to you, the average person staring at the screen, watching the seductive green arrows. You are in a dangerous position. It is psychological warfare. If you don't buy, you feel FOMO. You watch your neighbor making money on that ridiculous meme stock or the latest tech bubble. You feel like you are falling behind. That is how the trap works. It is designed to suck you in. It is like a casino. When the casino wants you to lose money, they don't turn the lights off. No, they make the lights brighter. They give you free drinks. They make the slot machines ring louder when someone wins. The stock market right now is that slot machine, glowing and deafening. However, we must face the mathematical reality. P ratios are detached from reality. The Buffett indicator total stock market cap to GDP has been flashing red for years. At this stage of the cycle, right before the break, there is often a final manic surge, the melt up. It is driven by short squeezes and pure speculative mania. Everyone convinces themselves that this is the new normal. They invent new economic theories to explain why it is different this time. The productivity miracle infinite growth from AI. In 1929, Irving Fisher said stocks had reached a permanently high plateau. In 1999, they said the internet changed the rules of valuation. In 2007, they said real estate could never go down. In 2025, they say the market can't fall as long as the Fed prints. History punishes this arrogance without mercy. So, what is the end game? It isn't that the world ends and we all live in caves. No, that is too dramatic. The reality is more banal and more painful. The end game is the reset. When the market finally corrects, when it catches up to the rotting reality of the real economy, the central banks will face a binary choice. Allow a complete deflationary collapse, a Great Depression x10, or print an unimaginable amount of money to save it. Since we know they will not choose deflation, because that means government insolvency and revolution, they will choose inflation. This means the stock market might not even crash in nominal terms. It might keep going up. The Dow might hit 100,000, but a Dow at 100,000 might only buy you a used car. That is the great illusion. They keep you focused on the price, so you ignore the value. When your portfolio is up 20%, but your grocery bill is up 30%, your taxes are up 15%, and the purchasing power of your currency is down 25%. You haven't won. You are being slaughtered. We are witnessing the end of the fiat currency age. It is the end of an 80-year super cycle that started at Bretton Woods in 1944, broke in 1971 with the Nixon shock, and is imploding in the mid-negative 2020s. The powers that be know this. That is why they are talking about CBDCs, central bank digital currencies. That is their weapon for the next phase. If the money goes bad, they need a new form of money that gives them total control over how you spend it. Does this sound hopeless? Maybe. But that is why this channel exists, because in this loop of despair, knowledge is the arc. You don't have to be a victim. History shows that in every one of these wealth transfers, there are winners. The winners are the ones who see through the fog of the stock market. The winners are the ones who understand that wealth is not a number. It is resources, land, gold, energy, and the ability to produce independently. The winners are the ones who realize that when nations collapse, they sacrifice the currency to save the market first, and sacrifice the market to save the regime last. We are in the final ticks of that countdown. It looks like a party, it sounds like a boom, but it is actually a funeral, the funeral of the old financial order. Do not be blinded by the illusion. While everyone is looking up at the green candles, make sure you look down to see if the ground is still there. I am your guide. This is the abyss of truth. If you want to stay lucid in the coming storm, if you want to know where to go when the lights go out, subscribe. We are just getting started, peeling back the curtain. Next time, we will discuss the digital prison they have prepared for you, how CBDCs actually work, and how much time you have left to opt out. Stay vigilant, stay skeptical. Fade to black.